Hey everybody, Smart Silver Stacker here. It's Monday, March 7th, 2022, and it has been a crazy day in commodities. I put a video out on Friday about how nickel and copper were both moving much higher and how the removal of the Russian supply of these metals was going to be driving the price up even more. Well, it didn't take long. Here's a headline from Bloomberg earlier today. Nickel jumps 62% as Russia's supply risk sparks huge short squeeze. And I'll read a little bit of this article to you. Nickel surged as much as 62% in one of the most extreme price moves ever seen in the London Metal Exchange, as fears over Russian supplies leave buyers exposed to a historic squeeze. Other base metals also surged, with copper and aluminum touching record highs before gains ebbed. Nickel, used in stainless steel and lithium-ion batteries, added more than $17,000 to trade at an almost 15-year high, above $40,000 a ton, in the biggest ever daily dollar gain in the 35-year history of the contract. And here's the 24-hour chart of the nickel price from kitco.com. And while that article was referencing the price of nickel per ton, you can see that this is the price per pound, up over $8 in today's trading session. And I mentioned in that video that I put out on Friday that I would be visiting the bank today and trying to get my hands on some more nickels. And I did go to the bank, and this is all I was able to buy. The bank would only sell me 5 rolls of nickels. The teller informed me that they have some rules in place that limit the amount of change that they'll sell to customers. And she acted like she was doing me a favor by giving me 5 rolls. She said that usually the rule is for non-business customers, they will only sell 1 or 2 rolls of coins at a time. That was pretty disappointing to me. I was hoping to pick up at least $100 face value worth of nickels. I am definitely glad to have been able to get these, but I would have liked to get more. The reason that the teller gave me for the shortage was I did ask her, what was to account for those rules and what was to account for the shortage, and she blamed it on the pandemic and said that it was because people's economic behavior had changed. They weren't going out and spending cash as much. And to me, that doesn't really hold water. I might have believed that a year ago or a year and a half ago. But today it seems like economic activity more or less has resumed its normal pace for the most part, and I wouldn't think that that would be a contributing factor to a coin shortage. So, it kind of got me thinking about what could actually be behind the coin shortage. And one possibility is that specifically with nickels, this is simply Gresham's law at work. Gresham's law tells us that good money will be removed from the circulating supply as it is replaced by bad money, basically paper currency that is being debased. That's why we don't have silver, quarters, dimes, and half dollars out there circulating anymore, because they have all been hoarded by people who are looking to get the good money out of circulation. So it could be Gresham's law. It could be people like yourself and like myself going and getting nickels and just hoarding them because they are worth more than their face value, so it just kind of makes sense. The other possibility that occurred to me, and this is just speculation, I don't have any evidence of this per se, but it's just something that crossed my mind. It could be that the banks are limiting the amount of hard currency that they'll put out into circulation because it's in their interest to condition us for a cashless society. And by creating a coin shortage, that makes people look for other alternatives. If you're a business and you can't go out and get the change you need to accept cash payments, maybe you just start encouraging customers to pay electronically. That's how all transactions will have to occur if we move to a cashless society. And I do think that that is the ultimate agenda for the Fed. They would like to transition us to a digital dollar, to a central bank digital currency. And of course, there's a lot of incentives for central banks and for governments around the world to transition to a system like that. As a cashless society and a central bank digital currency, that would make monitoring, regulating, taxing, just keeping an eye on every transaction that occurs in the economy much easier. So it is in the interest ultimately of the powers that be, governments and banks, to remove things like nickels and also other coins and paper currency from circulation. So I suspect that the Fed or the banks are keeping these and they're hoarding them and pulling them out of circulation. They're certainly aware of the fact that the metal in these coins is a lot more valuable than their face value at this point. And speaking of that, here's a screenshot from Coinflation today. When I made that video Friday, the melt value of a nickel, according to Coinflation, was about 7.6 cents, and now it's getting a lot closer to 9. So that's a pretty big move up for one trading session. And you can see here also the nickel price that's quoted on Coinflation, that it's basing that price of that coin off of, is a little bit different than the one reported over at Kitco. And I'm not 100% sure where Coinflation pulls its metals price data. There are a few different places you can get that. Just like with crude oil, you've got Brent crude and WTI crude. There's different exchanges where these commodities contracts take place. So I'm not 100% sure what exchange the price that is being used on Coinflation is coming from. It looks like it's different than Kitco. But even using this slightly lower dollar per pound price, you can see that the value of metal in a nickel is moving up pretty steadily and at a rapid pace. I don't think it'll be long before these disappear from circulation entirely. And I would be really curious for any of you who are watching who have gone out to your banks and tried to pick up some nickels. What's the situation like in your area? Are any of you having a hard time getting your hands on coins? Do they have the coins at the bank? Are they rationing them out like my bank? I would really like to know. So let me know in the comments down below and share that with all of us so we can get an idea of, what the situation is like around the country. One thing that folks commented on that video that I put out on Friday was, you can't melt these down, so where are you going to sell them to? It is true, you can't melt nickels or pennies for that matter. At the moment, there was a law put in place, I think back in 2007, when the price of nickel and copper really were spiking up. That was when nickel put in its all-time high. They didn't want people scrapping them and creating a coin shortage, which of course now we have anyway. And if you debase the currency enough, you're bound to get a shortage of hard money. Like I said, it's just Gresham's law. But anyway, you can't melt these down. So I don't really think that matters. I mean, for one thing, if they do disappear from circulation, like let's say they either remove cash entirely and we transition to a cashless society, or let's say that they just stop making nickels, or they eliminate them from use, or maybe they replace them with something cheaper, like, I don't know, maybe they make plastic nickels or something like that. I do think that these will disappear from circulation regardless, and a market will develop for them. In fact, right now, if you have copper pennies that you've separated from your zinc pennies, you can sell them on eBay. I mean, they sell pretty regularly for 3 or 4 times the face value of the pennies. You can just go and look on eBay for some completed listings. So, to the extent that you wanted to sell your copper pennies or your nickels, I think that markets will develop for them when the prices of the base metals move even higher and they disappear from circulation. But even now, you can see that these coins are in short supply, so I'm not really sure if you can find buyers for nickel yet above the face value. If you can't, that day is coming, because if the melt value of these coins moves up much higher, I mean, let's say it moves up to 15 or 20 cents, I don't think you're going to be able to go to the bank and get nickels at all. I don't think you're going to find them in circulation. There definitely will be a coin shortage at that point, like a real one, where you just can't get your hands on them, because why would anybody go spend these coins that are worth 4 times their face value in that situation? It wouldn't make any sense. Perhaps if that kind of a shortage develops, Congress might repeal that law that prevents you from melting them in order to help bring some more metal on supply for industry. That's a possibility. The fact that you're holding coins that are more valuable than their face value, I mean, these coins do have a real intrinsic value, nickel and metal, they are necessary. There's markets for them. So I think that people will definitely be purchasing these coins for above their face value in the near future. And also, you don't really need to melt these down in order to use them, because if you're looking at them just as a store of value or as a hard money, why would you melt them? They're already in a perfect form. They're in coins. I mean, think about in the silver market. In the silver market, a big bar of silver, something like a kilo bar or a 2 kilo bar, that has a very low premium attached to it. Whereas, silver coins, those have a higher premium attached to them. The smaller units of silver have a higher premium. Well, with copper and nickel, it's kind of reversed. You can go out and get these for their face value, so the premium is like a negative premium. You can buy these for less than what they're actually worth in terms of their metal content, the coins, the smaller unit. But the bars, like this 2 kilo copper bar, these have a pretty hefty premium attached to them. So it's kind of interesting. It's like a reverse situation from what you see in silver. And if the price of copper and nickel goes up significantly higher, which I forecast that it will, either from geopolitical instability, like in this case, or also because of simply inflation and debasement of dollars, which I think we're also going to be getting more of, then I think that situation may reverse. And I think that bulk copper might, like this, might be trading closer to the spot price. And then something like nickels, which are kind of a more convenient form of bullion because it's small, they're divisible, they're uniform. There's a lot of benefits to something like this. Plus, they're legal tender, they're minted by the U.S. Mint. So, there's a lot of things going for nickels over, like, say, just a bar of metal like this. Then I think that these might be the form of bullion that develops a premium. So, that's just, again, just some speculation on my part. I don't really necessarily know that that'll be the case, but that could happen, I think. And, you get a situation similar to the silver market where big copper and nickel bars are cheaper and then coins are more expensive. And also, speaking of inflation, not just geopolitical instability, we are seeing a huge spike up in the price of oil right now as well. It's not just copper and nickel, commodities across the board, foodstuffs, wheat is moving up in a big way, and energy specifically. Oil is now over $130 a barrel. And I've heard people referring to this as inflation. And yes, there is an inflationary component of this, but there's been inflation, growing inflation, for some time now. And it's just now, on this news of geopolitical instability with Russia and Ukraine, that we're seeing the price of these commodities spike up. So I don't think that this spike up in oil is inflationary necessarily. It's more of a supply crunch because of Russian energy supplies being removed from the market. But what is going to be inflationary, and what truly will be a inflationary cause for commodities to continue moving much higher, is that rising energy costs like this could trigger a recession. Now, that's not inflationary, I know, but what will be inflationary is the response of the Fed to any recession that is created by this tick up in the price of oil. Because, as oil moves up, folks have to buy oil. You have to drive to work. You have to heat your home. You need energy. There is a certain amount of money that you just have to spend on energy if you want to drive your car around, and you can economize to an extent, but without drastically changing your lifestyle, you're going to need some energy. So when people are spending more money on things like gasoline and food and energy, that means that the amount of money that they have to spend on other products declines. So that actually can trigger an economic slowdown, and it can bring the prices down in other products. But what will happen is, if we see that kind of a recession, the Fed is almost certainly going to come out and stimulate the economy. If we get a big drop in asset prices, if we get a big drop in stocks, if we see a big drop in real estate, then almost certainly the Fed is going to come to the rescue, and they're going to reverse the slightly more hawkish attitude that they've had of late, and all the talk of getting inflation under control, and they're going to do whatever they can to reinflate those asset bubbles. And that means printing. They'll be injecting liquidity into the economy, probably in the form of more quantitative easing. They will be buying treasuries. They will be lowering interest rates. Maybe we'll get negative interest rates. Who knows? They'll do whatever it takes, I believe, to keep the economy going. And these rising energy prices that we're getting from all of this economic warfare and these sanctions, they could be the thing that pricks the bubble and forces the Fed to begin printing currency again in a big way. And I mentioned in a video I did recently about how that is the exact thing that needs to occur before gold and silver can really take off. Now, gold and silver are already moving up nicely. Gold was over $2,000 today. And silver is still nicely over 25, kind of consolidating their gains at this point. Although, by the time you watch this, that may have changed. Certainly things are evolving rapidly in this market. What do you think is going to happen with the price of base metals? Will this just be a temporary spike up because of instability, or is it going to be for the long term? I would love to know what you guys have to say. Let me know if you can get your hands on nickels. Let me know what the nickel situation is like in your area. I do think that would be interesting data for everybody watching, so let us know in the comments below. And if you guys enjoyed this video and you'd like to see more like it, then check out the ones that are popping up on your screen right now. Thank you all very much for watching. I will catch you next time. Happy stacking and stay safe. Smart Silver Stacker, out.